Greetings. Hope everyone is doing well. We're actually live with this show. Uh, Maybe you didn't know this, but last week's was not live. It was pre-recorded because we were all out of town. So we're going to talk about several things today: being a small dollar lender, investing with family and friends, and raising capital. And we'll get to some examples right after this. Hi, everyone. Welcome to the Real Estate Investor Show, Hard Money for Real Estate Investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate professionals. If you have a project you'd like us to take a look at, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget about Wednesdays with Wendy. I think this one is so short now that we should just play that twice next time. Not now, next time.
Yeah, that's funny.
So Wendy devotes 30 minutes per person each Wednesday. Talk about anything real estate. There's the link. It will be over in the chat, which is on the right side of the page, or underneath, depending on the platform that you're viewing us from. And in case you were wondering, yes, I'm wearing the same shirt that's been on this show 3 times in a row.
I don't think anyone was wondering that.
However,
But way to tell on yourself.
it's very, I'm being very self-conscious about it. Yes, it's been washed.
It's a nice shirt. Yeah, you can see the crease.
Thank
Yeah.
Anyhow, let's do some breaking news. You mind?
No.
So today, very important CPI numbers came out, and that stands for Consumer Price Index. This is the third quarter reading, and this determines people that are on fixed income, Social Security, on how much they will get raised for next year.
Yeah.
And it came in at 8.2%. So we have inflation of 8.2% year over year. The core number for month to month was 0.4%. So it is higher this month than it was last month. You pull out energy and food, which, as we all know, that is really the most expensive and the most important.
So that is the core.
It's still 6.2%. I mean, that's pretty high.
Yeah.
So that means everything is going up. So guess what? The stock market didn't really appreciate that this morning, and I haven't looked at it before we came on the air today, but we were below 2,900 on the Dow, before I came to work.
Yeah.
On the futures market. So those folks that were hoping for the Fed to maybe postpone or maybe do a 50 basis points raise in the interest rate.
Nope.
Be prepared for another 75 basis points.
Oh yeah.
That's all I can say.
It's coming, and yeah, I mean, they have stood by, bringing inflation down, and as these numbers continue to set where they are, if they do what they say they're going to do, it's going to be 75 or even one full percentage.
Well, they were too slow to act because they said it was transitory. The rest of us knew it wasn't.
Oh gosh. Yeah.
And then on top of that, you've got not just our government, but governments around the world are counteracting what the Fed's trying to do. Every time they try to slow stuff down, the government gives out more money. And the more money they give out, the more it stimulates activity. And you can't lower inflation if you constantly have activity being, I mean, the whole point of raising rates is to have what we call demand destruction. And
Right now they want to, lower the demand for houses and also, and raise the, unemployment.
Yeah.
I mean, that's the goal.
well,
Yeah.
the target is housing.
Mm-hmm.
And why do they target housing? Number one, it's one of the largest expenses, but all the other products that are connected to housing, furniture, HVAC, all that stuff,
Yeah.
building materials. There's a lot of things that are attached to housing that if you slow down housing, you're going to slow down a large chunk of the overall
Correct.
economy.
Yep.
That said, I don't want anybody to freak out. People were still fixing and flipping homes and making a profit when we still hadn't figured out if we were at a bottom yet after the 2008 crash.
Yeah, I mean, like we were talking about with a room full of real estate investors last week. I mean, or real estate lenders rather. We're really excited. We're excited for our partners and ourselves and our clients because opportunities will now be more readily available.
Yeah, and as a selfish note, businesses like ours, and we're talking to other
Private lenders,
hard money and private lenders that are balance sheet lenders like us.
Mm-hmm.
We are all going to capitalize on this because the short-term lenders that got in bed with the institutional financing people who were pulling back
mm-hmm.
because interest rates are going up and getting nervous.
Yeah.
That's not affecting us because we hold our own loans.
Yeah.
It's really affecting them. We had some information that there are some people in our area that are going to have to start laying off a bunch of their folks because they can't get the capital anymore.
Yeah, I mean, it's what we've been talking about for a long time, scaling responsibly and,
Yep.
Not building a machine that you have to feed. And when markets shift, there's nothing left to feed it.
Right. And I got one more breaking news before you get to some
Okay.
multifamily stuff. Today
Oh, look at that.
is our man Scott's birthday. Happy birthday, Scott Patton.
Since
Look at
he
that wonderful smile.
Since he runs the video, we had to print something off to stay incognito. It's funny. Happy birthday.
So
Yeah. Well, I want to talk a little bit about multifamily. RealPage has been keeping track of absorption or, how many units are being rented by the quarter. And they've been doing this for about 30 years. And this third quarter marks the first quarter ever in that 30 years where there was a negative absorption rate. What does that mean? It means that there's just less people in the third quarter renting apartments and getting those apartments. And so typically, why is that anomaly? Typically the third quarter is very strong. That's a strong lease up period. Fourth quarter is usually the tie, where it trails down. So this is quite an anomaly. We'll keep track of it. That being said, vacancy is still 4.4% nationally. So it's vacancy is really low. It's just we've had such a run up to this point that.
And that's what I was going to ask. Are we getting to a point where there's oversaturation in?
We're building towards that. Yes. That will. I think that's a trend that we will continue to see for the next few quarters.
Mm-hmm. And if you think about it too, we have an oversaturation of A-class properties too. So these are the brand new luxury type apartments. That's what's been being built over and over again. And as the economy slows down and people start spending less money, they're going to start going towards those B and C class properties because they can't afford that rent.
Now, the other side of that is we're seeing, rents kind of where they're around 20%, year over year last year. Now we're running in the 9s, which is still an increase. It's just,
Sure.
it seems to have plateaued and coming down now. Everywhere except Florida. And that is due to, most recently the hurricane there.
Sure.
There are several instances of people renting 2-bedroom, 1-bath houses for $5,000 a month.
Wow.
Like it's crazy
Ones
right
that
now.
weren't damaged by the hurricane.
Yeah, because people are scrambling to find shelter, and so everywhere except
Fortunately,
there.
a lot of parts of the Florida that got hit are second home. We call them snowbird homes. So about half the population that's in those areas that were hit are only there in the winter.
Yeah.
So it's not like it's their primary residence. I don't think it's going to be as bad as it could have been in other areas because, the housing that was there was, in most cases, wasn't occupied anyway.
Yeah.
And as much as we like to get into the warm weather in the winter, you may have to stay home this winter until you get your place fixed up. But if your place was not damaged, then you can still rent it out to others who need a place. Not to mention all the contractors and stuff that are coming in the area.
Sure.
They're going to need a place to live.
Always. Yeah.
While they're working down there. I know that's where Wendy is right now. She carried I think they have like a 32-foot travel trailer, and she had to park it at a campground that's an hour away from Inglewood.
Oh, wow.
Because there was no places available any closer.
Well, let's jump into, I know we wanted to talk about, so.
Yeah. So our theme this month is how to do small dollar lending, investing with family and friends, and then raising capital. And we're going to go over some of these items, and then later on in the month, we're going to have some guests that are going to be coming on that have experience in this, and they'll give us some case studies on how they did it. Because one thing I love about the real estate business is that there's a problem that is solved, whether it's on the lending side or the acquisition side or raising of capital side. And there's
that's the with everything that anyone does, I think in any arena, you don't look at how much can I make or how much will I pay. It's what problem or what pain is being solved, or what pain or problem is being caused, and how do I solve that. So if you can look at it that way, that's usually the better way to go about it.
I'm sorry, one last thing before we get on to this. I did see a piece yesterday, I believe it was, about this second quarter for 2022 was the smallest percentage of fix and flips since 2009, I think it was.
I believe it. It'd have to be. Yeah.
However, it was the highest profit of any time since then.
The net gain per property?
Yes.
Yeah.
So two things to consider with those numbers is that there are fewer, we'll call them non-professionals doing it now.
Yeah.
So because it's harder to find inventory and things are questionable on how the future is going to look, I think your professionals that have good marketing, those are the ones that were able to find the properties and get them fixed up and sold.
Yeah.
Secondly, excuse me, the reason they're making the most money is because the market in the second quarter was still pretty good.
Yeah.
Right.
Oh yeah. I mean,
it was still a seller's market. That said, I hate when they always come up with these fix and flip numbers, because they only go by what they paid for it and what they sold it for. They have no idea how much anybody has put into it, because they don't have those numbers. So how do we know they really profited more? We don't.
It was the potential of profit is
They
really
just
what it
sold
should
it
be.
more than what they paid for it originally.
Yeah. Yeah.
So all right.
I mean, there was more demand. Yeah, the highest, appreciation.
Yeah.
So they had the.
Hey.
Hey Scott, happy birthday!
Oops.
Happy birthday.
Happy birthday.
boy.
Thank you.
You're
Sharoob, get
welcome.
me out of here.
So
That's funny.
gotta love live streaming, don't you?
Yeah.
Okay, so let's talk about the first one that we discussed, the small dollar lending. There's a lot of people that have small, say a Roth account that they're just getting started with their self-directed retirement fund, and they have no idea how to get that money and put it to work.
Yeah.
So one example is networking. If you have a good network, you know people that need money, you know other people that lend money.
Yeah.
You can put that to work fairly easily. So I'll give you an example. Let's say you know someone who needs $100,000 loan.
That's a small dollar amount.
No,
Oh,
you need somebody. You
thought
know
you were being
somebody.
bougie.
No, you know someone that needs $100,000 loan.
Okay.
You know another person that probably has $99,000 they could lend if they wanted to,
Mhm.
and they want to put that money to work. But you have a Roth IRA that maybe has $1,000 in it,
Okay.
or it might have $6,000 or $7,000 in it, but you don't have to use all that money. So how can you put that money to work, or at least jack that up quickly?
I feel like you're gonna make a Voltron reference.
No.
Oh, okay. So,
So because you become the deal architect,
okay.
you have the borrower that needs the money. You know the person that has most of the money. Let's assume an interest rate of 10%.
Okay.
Well, the person that has money that's not doing any of the work.
Can we do 12%? That's really easy math for everybody.
Okay, whatever.
All right. 12%.
All right, so it's 12% interest rate.
1% per month.
You
Real easy.
You as the deal architect, you put the deal together. You get the friend who has, we'll just say 99,000,
Okay.
and then you have 1,000 that you're putting in from your account. Now, how is that a good deal for you? Well, you charge the actual interest rate is 12%, but the person that has the 99,000, they're happy getting 10.
Mm-hmm.
Right?
Yep.
You also charge a couple of points origination on this thing.
Yep.
And maybe you get two, or there's two charged total. You get one, and the person that has the $99,000 loan gets one.
Okay.
Right? It's still 2% of 100,000. That's $2,000.
Okay.
So the $1,000 that you just
Correct.
so now none of your money is at risk.
So
because got
you've
that
already
upfront.
you've already made 100% return, and you haven't got the first
Right.
Monthly check yet.
So
Okay.
as this loan goes on, you're the one collecting the payments.
Mhm.
You're sending the 10% part to the person that has the 99,000. Actually, you're not sending it to them. You're sending it to their
Custodian.
IRA, assuming that they also have an IRA.
Yeah.
And then you're keeping the additional 2% of that payment, and it's going into your Roth
Mhm.
throughout this transaction. So not only did you make $1,000, because at the end when it pays off, you get that $1,000 back.
Mhm.
Plus you made $1,000. Plus you're making 2% of the payment the whole time, and you've only put that little small amount to work. So that's how you put small dollars to work.
And I know everyone's out there saying, but if I do that, aren't I subject to third-party servicing laws? No, you're not, because you're in it at $1,000 or 1%. You are an owner or a lender in that deal.
Right.
So you own a lien position, and you can service your own debt, which allows you to service the entire loan. So anyone that had that question pop up, which I know several of you did, just wanted to put that to
In
rest.
reality, nobody asked that question, but they should. In some states, you're not allowed to service a mortgage loan unless you are a licensed
A
servicer,
third party just means someone else's loan. Yeah.
unless it's your loan.
You are in every state of the United States, you are allowed to service your own loans.
Right. And because you have a piece of it, you're not a third party.
Yeah.
You-
Exactly. You are a party to the transaction.
And then the other way of doing it is you could just be in second position in another small deal. But what it boils down to is you still need to have a network. You can do these smaller deals. You just need to have friends that have deals.
Yeah.
You just need to be the deal architect. You don't have to have a whole lot of money.
And that's, like that's just how it is in real estate. And in most, I think in most things, if you have $1,000, $2,000, $5,000, you're going to have to do a little bit more work to get that level of return. However, that work is going to allow you to get up to 150 and 200% return on your money, and that can grow your small balance IRA
Yep.
or whatever investment vehicle it is. It can grow it rapidly. So that was a really good point, Bill.
You want to talk about investing with family and friends?
Don't do it. No.
Okay, so from a banker or from a lender side of things,
Yeah.
never lend family money, because if you have to assume you're not going to get it back.
Always go back to that sitting at the Thanksgiving table.
Yeah.
It's like, you still owe me $30,000.
That's right. But there's nothing wrong with investing with somebody, getting equity to a piece of property. At least you know
Mhm.
that if something happens, you own a piece of property that's worthless.
Yeah, yeah. I mean, you can jump in.
I'm just kidding. Family and friends are the first people you go to when you start.
Especially when you're looking for more like mezzanine, pref, and common equity.
Do you want to explain that? What
Yes.
mezzanine is and
Sure.
common prep?
Yeah, so we talk about capital stack all the time. So you have your first lien debt, which is typically like your banks or someone like us that's going to take a first lien position. It is your first lien debt, and then beyond that, you're going to have mezzanine debt, which can be a second lien position behind that, or it can be unsecured or secured by some other vehicle through the LLC. And then beyond that, you have preferred equity, which is typically granted to your limited partners in an LLC. So you have limited partners and general partners. General partners are typically the operators of the property. Limited partners are the people who are bringing the equity, and they get preferred equity, which means after the debt, they are the first people to get paid out. And then the general partner has the common equity, which means after the debt's paid, the pref equity's paid, then they make their money. So it's just a waterfall effect.
And if you're wondering why it's called mezzanine, yes, you're still in the building hearing the same concert. You're just doing it a little bit higher up in the.
Yeah, good reference, Bill. Yeah.
It takes you longer to get your popcorn.
Yeah. So yeah, with friends and family, that's the best way, is to do kind of, in my opinion, that pref and common equity route, just because it's people that you typically know, like, and trust,
right? And
you feel comfortable maybe not having a fixed lien to a real property.
Right.
Yeah.
And let's cover capital raising very quickly.
Oh, that's the best one.
Some people are really good at it.
Yeah.
Some people are not. But if you're into capital raising for any project or fund that you may have, it's all about relationships.
Mhm.
People are not going to invest with you unless they like you and they trust that your decision making is competent. Right?
Yeah.
And it has to be, whatever project you're doing has to be easily explainable, and at the same time, it's got all the numbers have to work. It can't be kind of one of these projects where if everything doesn't fall into place, you're not going to profit.
Mhm.
It has to have many contingencies that if this happens, we still make money here. If this happens, we still make money here.
Yeah.
If this happens, we can sell it. If this happens, we hold on to it.
Yeah.
And
it
it's all
really-
about relationships.
It really breaks down to each side, to raise the capital, to be the salesman, to tell the story, to know the project. And then the other side is the person who has the capital to be able to look at the story and look at the project and look at the numbers and say, that works, or no, I don't think that works. So there's really two sides to it. So if you're on the raising capital side, you want to know that inside and out. One of the I think pitfalls that a lot of people, when they talk to me about raising capital, when I ask questions, they don't know the answer to them. And not that those are tricky questions. It's like, you should know, right? What are you purchasing at? What is your run rate? What's the cap rate? You know, if this is commercial or multifamily, what's the cap rate you're buying into? What's the cap rate you're operating at? What's your pro forma cap rate that you're exiting at? If it's single family, you know, what am I buying this for? What are the comps in the area? What are the rents? If something goes bad, you know, the project that we're taking on, do the market rents of that area cover this? If they don't, what's that rate of return going to be based on those rents? To know all of those things and to be very transparent and open and forthright with them, like that's the easiest way. Because when someone talks to me or when I talk to someone else, when you know these things, it doesn't matter. Like, I'm not saying like, let's make 24%, we're going to just crush it.
Right.
Like, people aren't looking for that because it's their money that's either hard earned or, you know, whatever the case may be. They want to know that it's safe. They want to know that, you know, that you're going to take care of it and you know what you're doing. There might be people out there who just want 24%, but my experience has not been that case.
Yeah. And look, you have to know, number one, who your avatar is and who it is you're speaking to. First and foremost, when you set up the deal, it has got to be beneficial for each party. And from my perspective, it needs to be more beneficial to the investor than it is the sponsor. In our case, and we deal with a lot of private professionals, dentists, orthodontists. When you look at their business, and this may surprise folks that aren't in that industry, their overhead is in the 70% range. So they're operating on only about a 30% margin or less.
Yeah.
Okay. Our fund last year had a 67% profit margin.
Different models. Yeah.
Now, again, there's not nearly as much overhead, but what we try to do is make sure that the investor is benefiting the most. Listen, we're still making a living, or we wouldn't be doing it.
Sure.
But in order to keep your investors coming back and continuing to put money with you as your projects change, make sure that they are the biggest beneficiary of your investment, right? And that you will never have trouble continuing to get capital raised because you're always, number one, you're providing them with a good risk return. And at the same time, you're giving them the largest benefit of the project.
Yeah. And again, like you said, you have to know who is your audience.
Right.
Are you talking to a lot of people who have self-directed IRAs? Well, equity doesn't mean a whole lot to them. Well, it doesn't mean anything to them, honestly.
Right. Just don't get the tax
they don't get the tax benefit. So they're looking for growth and cash flow. So they're either going to say, hey, I don't mind to not take payments for a while if I can get X amount. You know, so just know who you're talking to. And if you're talking to someone who has their cash and it's like that's their savings that they've been working on, they don't have a retirement account. What's important to them? Probably cash flow because they want to live off of that.
Right.
So maybe a higher payment is better for them. So just know who you're talking to.
And at the same time, depending on where you are in life and what your needs are, some people already have what they have and they're just trying to protect it and outpace inflation.
Yeah.
And then you have other people who are young and have plenty of time to catch up should something go backwards on them, or someone who got started saving late and they need high returns in order to catch up where they need to be, and they're more willing to take risk.
Yeah.
So if you have a project that is low risk and we'll say a moderate return, you're not really going to benefit the folks that need it right away.
Yeah.
So it's just not a good fit. So don't get discouraged because your deal is not good. It's just not right for them at this time.
Exactly.
Right?
Exactly.
So keep that in mind too when you're doing your little questions with your potential investors, what they're looking for, what their needs are, that type of thing. And then in this industry, there's a lot of us that know each other, and we're while we may be competitors, we also work together. You could recommend that person to another fund manager who has some of those opportunities.
Yeah.
And they will in turn recommend people to you
Mhm.
that are, more in line with what it is that you're trying to accomplish.
Absolutely.
All right. So sorry, we were long-winded. We had a lot of breaking news and Scott's birthday. So thanks guys for joining us. Hope to see you again next week. We are Carolina Capital Management, and thank you again. Sorry, I'm messing up with the stuff at the bottom.
It's all right. No one notices until
thanks
you
for-
point it out.
Thanks for joining us on the Real Estate Investor Show. Hard money for real estate investors. And once again, we are Carolina Capital Management. We are private lenders for real estate professionals in the Southeast. If you have a project you'd like us to look at, go to carolinahardmoney.com. Click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget, I forgot about this. Yes, Wendy is going to be speaking at the Wise Women Expo. And here is the link. It is October 14th and 15th. It is a Zoom only kind of event, but all the women are really smart women investors.
Would you say they're wise?
They are wise.
Okay.
If I was truly wise, I would have figured out that we had a graphic for that too, and I would have just shut up. Anyway, the link will not completely finished.
Love it.
Where was I? Don't forget to like, share, subscribe, hit the bell. Wednesdays with Wendy. Have a great week. Take care.
Hey,